We're going to chat now about growth, and we're going to look at whether it's the future of growth is organic or whether it's in new acquisitions. I'd like to call the panel to come up now. I'll introduce them. We have Mossadeck Bally, who's the CEO of the AccorHotels group. If you want, gentlemen, just come around here. Ignace Bauwens, who's the Regional Vice President for the Middle East, Eurasia and Africa for Wyndham Hotels and Resorts. Alex Kyriakidis, the President and MD for the Middle East and Africa for Marriott International. And Mark Willis, the CEO of AccorHotels for Middle East and Africa. Thank you, gentlemen. If you just take a seat. I'll just give you a brief outline of who these gentlemen are. Although as I was preparing this, I thought everyone in the room is going to know who these gentlemen are. You don't really need to introduce them. So just very briefly, Mr. Bally is not only the CEO of the group, he's also the founder. And in 1994, he acquired the Grand Hotel in Bamako. Since then, he's gone on to build the first African private hotel chain group in West Africa, and the group currently directly employs about 900 people and indirectly provides job another 2,000 more. Ignace Bauwens, since 2016, he's been with the Wyndham Group. He's based in the company's Dubai office, and he joined the group with over 30 years of experience in the hospitality industry, with roles at Accor and the Intercontinental Group beforehand. Alex Kyriakidis, I hope I'm saying that correctly. He joined Marriott International at the beginning of 2012. 45 years of experience in providing strategic financial, M&A, operational, asset management and integration services to the sector, and importantly, he was the regional executive sponsor for the acquisition of the South African Protea hotel chain in 2013. He's also the regional sponsor for the integration of Starwood's hotels and resorts. Mark Willis, the new CEO of AccorHotels for the Middle East and Africa. He has worked in the region for over 12 years now. Last month, he joined the Group Executive Committee when it finalized the acquisition of Mövenpick hotels and resorts. His career spans over 30 years in the hotel industry. Before he joined Accor, he was the president of Mövenpick in Asia. Before that, as most of you will know him, he was 7 years as senior VP at Radisson Hotels, Middle East and Africa. So a huge thank you, a huge welcome. I'd like to start by talking about opportunities. And I'd like to ask you what the opportunities are, 2 opportunities that you see in Africa.
What a big question.
I know. Put you on the spot. Start with.
Well, firstly, we're in the tourism sector. So as always in our business, there's plenty of opportunity. Across the continent, 10% of the GDP growth is tourism related, which in itself provides a wealth of opportunity. If I could pick on something very specific, I think it's a huge opportunity that at such a conference we see conserve up there in front of us all when we're here to primarily talk about business, commercial growth, which we are all interested in as branded hotel operators. But critically, I think we're at a vital stage for Africa. All of us want growth, but I think we want the right growth. And that key topic is up in front of us all. I think it's a really, really positive statement of where Africa wants to go. Yes, it wants to grow. The tourism industry wants to grow, but it wants to grow in the right way.
Okay, thanks. Alex?
Yeah, coming to specifics, 2 things, conversions and mixed use. What we're seeing is that the cycle of conversions is beginning to move very quickly in Africa. A bit of breaking news for you this morning. We're delighted to welcome Sankara here in Nairobi to join our autograph collection. And we're seeing the flip to conversions because independent hotels have reached a certain level of growth and are thinking, where is my next level going to come from, and where is the engine that's going to give me that growth? And with 110 million members today, our distribution footprint in Africa of 24,000 keys in 21 countries, it's kind of attracting that kind of dialogue with us. Also recently, the iconic Mina House in Cairo joined our platform as well as a Marriott. The second one is mixed use. This wave started in the Middle East and it's now spilling over to Africa, where developers want to de-risk a mixed-use development. So they're looking at a hotel component, a branded residential component, and a commercial or leisure component, and using the branded residential piece as a way to de-risk the entire investment. We see that in the Middle East. Globally, 55% of all branded hotel room keys are with our brands. So it's an area where we have huge depth and strength. And we saw it now emerge in Africa. In Cairo, a couple of weeks ago, we signed the first JW Marriott residential development of 500 keys in a mixed-use destination. And I think as you look at cities across Africa where malls are going up, where developers are looking at big mixed-use developments, certainly the idea of branded residential is beginning to appeal for that very reason, de-risking the hotel and other elements of the investment.
Okay, thank you, Ignace.
Yeah. So I think, building on what Alex said, we have quite a demographic growth, so it creates a lot of opportunity. And if you looked at what we learned this morning from our friends, mainly also from during the presentations, is that we see opportunity is there compared to the rest of the world. There's a lot of number of hotels per capita we can grow. So there's a lot of growth for all of us, which is, I think, the first opportunity. The second one is also looking at the business model. We've seen that Africa franchise to manage is reversed from the US. So I think growing, when the continent will grow, the business model will mature and there will be more opportunities for franchise that potentially will equal the managed opportunities.
Okay.
Well, I think all has been said. I see opportunities everywhere on the continent, especially in the economy segment and the mid-market segment. Also the extended stay, which is quite new on the continent. We see more and more demand for extended stay. So that's where I see growth coming. I don't think there is a big market for luxury hotels, except in some niche markets like in South Africa, Egypt, Morocco. I don't see a big market for luxury.
Okay. So those are the opportunities you see. Azalaï, Wyndham, Marriott, and Accor. Where are your groups in Africa today?
We are mainly on the west coast of Africa. We started 25 years ago in Mali by buying a state-owned hotel, Grand Hotel de Bamako. And then from Mali, we went to Burkina Faso, Guinea-Bissau, Benin, Mauritania, and Ivory Coast. And now we are building 4 more hotels in Senegal, Guinea-Conakry, Cameroon, and Niamey in Niger. So we want to focus on West Africa. We don't want to stress ourselves too thin, because we all know that to develop a hotel is quite challenging in most of our countries. It takes anywhere from 3 to 4 years. And once you open your property, you face the operation challenges also, especially the lack of trained human resources. So opportunities are there. We can do 10 times more if we want. We are offered many joint venture opportunities, but we prefer to go step by step, so that's why we concentrate on the West Coast. We know that there are opportunities here on the East Coast, but we think the East Coast is much more competitive and much more dynamic. So we don't want yet to come here. Sorry, Mr. Minister. But once we grow and come to a level where we can come to East Coast, Kenya will be our point of entry.
Okay, thank you. Ignace, where is Wyndham?
Well, I think to the African continent we're quite new. So let's say the last 4 or 5 years we've been really working on it. So compared to, I would say, Alex and Mark, we are quite new players on the continent. We operate in 6 countries for the moment with 4 of our 20 brands. We will be adding over the next 4 years another 4 brands. Majority of what we do is in the mid-scale to economy sector, with a focus to date on East Africa and North Africa, but we'll be moving into West Africa, especially Benin and Senegal, over the next 2 years.
Okay.
I'll talk about where we are, but also about investment, because that's an important point. So today, we are in 21 countries in Africa, 136 hotels with 24,000 operating rooms. Those rooms, our real estate partners invested $4.6 billion to make them happen. We have 65 hotels under construction, about 14,000 keys, and our investors are going to invest about $2.4 billion to make those happen. This will expand our footprint from 21 countries to 27 countries in Africa, and our brands from 13 to 19. To give you a complete picture and not miss a very important part of our business is our associates. We employ 35,000 associates today, 99.9% of whom are local. And to really open the doors to our 65 new hotels, we're going to have to find 15,000 more associates to join the Marriott family. So that's kind of a very quick snapshot of our presence in Africa today.
Okay. We'll go back to that because I want to pick up on that specifically. Mark, where is Accor?
Well, while I'm new to Accor, just over a month, Accor is not new to Africa. Over 50 years on the continent. As everybody knows, extremely strong footprint in North Africa. Currently, we're operating 150 plus hotels across 15 brands across the entire continent. We've got 4 support offices in Africa, which I think is important given the size of the continent. One in Cairo, another in Morocco, one in Dakar, one in Johannesburg. If you look where we sit today in North Africa versus Sub-Saharan Africa, I think the focus for us is the growth there and to realign that footprint. And you heard Olivier Granier talking this morning about the investment fund. That'll be a strategic push from Accor in the years to come to utilize that fund and make sure that we realign ourselves in Sub-Saharan Africa with growth in the future.
Okay, thank you. Okay, let's go back to what Alex was saying. Across the continent, a young population, they want jobs. That's the bottom line. They want to be able to work.
Yeah.
What needs to be done to capitalize on that?
It's a critical point. All day, all of us have looked at key statistics from STR this morning, JLL, with regards to the growth. All of us are talking about growth across the continent. Accor, 40 hotels to open in the next 3 years. Marriott's associates, as Alex mentioned. If you look even in the mature markets in Africa, the infrastructure with regards to training and development still needs to further develop. And in the less mature markets across Africa, this is a critical issue. Look at the growth that's coming and the need for talent and people to deliver on guest expectations across the continent, which, as we all know, will only increase, it'll only continue to grow. There is a real void there of training and development infrastructure, and that's something that absolutely needs to be a focus in many countries on the continent.
Sadek, how have you found it? And when I introduced you, I said that your chain, I think it's 2,000 jobs. Is that directly?
Yeah.
What you've created? How have you found it in specifically? You're in West Africa. How have you found the level of training, and what are you doing to help with the lack of training in the area?
Well, probably today, for at least Azalaï Hotels Group, this is the biggest challenge. We have
It's the biggest challenge, do you think?
absolutely, because in most of our countries we don't have hospitality schools. We need more Italy schools across Africa, and well, they are just living at the time where I'm talking about HR training. But if there is a message I have to send to the governments, they should really invest into human capital, because, well, you can develop a hotel, you can open as many hotels as the market needs, but it takes time to train people. And at Azalaï Hotels Group, what we did, we started our own vocational training school in Bamako. This year is our third year. We just graduated 50 young people from that school. It's a one-year vocational training school where the ninth graders, they stay half of the time at school, half of the time on the premises, hotels, restaurants, diplomatic compounds. And after 1 year, 95% of them could find a job in the hospitality industry. This is really what we need, and this is where the government should focus on and invest on. In, I would say, almost all the countries where we have invested, there is not a single true hospitality school. And this is really a message I want to convey to the industry leaders, to governments, and to stakeholders. If we want to keep up with the growth pace that we see in the hospitality industry, definitely we have to invest not only in infrastructure, but also in human capital.
Ignace and Alex, I'm interested in what you think about this, because you're both based in Dubai. It must be very interesting that you go to Dubai, you walk into a hotel, and most of the people there are from this region, and then you come to this region and you can't find the staff. Ignace?
Yeah, but I think Middle East and Africa, and even panning into Eurasia, there's a lot of exposure of staff. And also I think when people grow in our companies, they have also the opportunity to grow and to discover new countries. Creation of employment is a thing we do in our industry and is something that is key to us, our team members, associates in every country. But I think it's also important to evolve, because I think how training was done 30 years ago or today is very different. When I look at our L&D department, we are focusing less, I would say, on classroom trainings, but more on online trainings. People can take it, short snapshots of training on their mobile phones, on computers, on their tablets. So how we evolve the constant training for people in what we do. We, as Wyndham Hotels and Resorts, we create these options, we create these modules online with a partner to enable our team members to take those trainings. So, but the exposure from Africa to the Middle East or to Eurasia is something that is naturally there.
Mm-hmm. Alex?
Maybe I could just talk about some of the trends that we're seeing in this very important area. First of all, we're seeing in the Middle East and rapidly elsewhere now in Africa, the whole idea of, call it nationalization. Saudiization in Saudi with minimum quotas for the nationals that unquestionably will spread across the rest of the Middle East. And you come to Africa, you go to South Africa, you have BBEE, broad-based black empowerment, where, again, the more you invest in training and developing South Africans, the higher your score will be. So this is an extremely serious and imperative for us all in this industry. And I'm sad, like you, that the ministers are not here to hear this, because really this has to be a joint partnership between government and the industry. You need to get the word out to the schools, to the colleges, to the universities, that, you know what, tourism, hospitality is an absolutely legitimate and exciting career path, and to really have that support. Egypt, we 3 weeks ago launched a program called Tahsin, which in Arabic means improvement, jointly with Halwan University, because we just couldn't get that traction with government. And so we've partnered with Helwan University and Marriott to put together an 18-month fast-track program for graduates who'll join the program. 18 months later will come out with a certificate from Helwan and a certificate from Marriott and a guaranteed managerial role in one of the Marriott hotels. It's that kind of thinking that we need to encourage career growth in our industry, but it needs to be in partnership with government, not to fight the battle alone, because it literally is a major challenge. For us, finding 15,000 new associates is hugely challenging. Absolutely. And that's an imperative for all of us, I would say.
Yeah, true.
I wouldn't want to put you on the spot, but is there any government in Africa, in any of the countries that you're working with, that you're seeing that they are taking active steps in dealing with this issue? Any of you?
I think we're
not putting us on the spot. Yeah.
Okay.
I think Alex's hesitation tells the story. And as he says, it's a shame that the relative ministers left us.
Okay. Africa is a very risky environment. I mean, I think it has to be said. And I would like to ask you, we talk about the opportunities, I'd like to ask you about the risks now. Mossadeck, you work in a very, at the moment, high-risk environment. What are the risks and how do you mitigate them?
Well, Azalaï is a perfect example of what is possible in what is so-called a risky environment, because we started in Mali, a post-conflict country. We went to Burkina Faso, which is today also a post-conflict, Guinea-Bissau, and you name it. From my own experience, what I can say is that there is a big gap between the perception of risk on the continent and the real risk. And unfortunately, we Africans, we don't tell our own story. It's the international press which tells our story. So that's make people seeing Africa as too risky. Yes, there are challenges in Africa. Infrastructure challenges, air connection. I came from Bamako. It took me 10 hours from Bamako to Nairobi.
What was your routing?
Bamako, Addis Ababa, Nairobi, because we have a flight, Kenya Airways is flying to Bamako, but then I had to leave Saturday instead of leaving Monday. So these are the challenges we face, administrative red tapes, corruption, let's name it, poor contractors who don't have the skills, the staff, who are underfinanced. So we all know these development challenges, operation challenges, but yet the opportunities are there. And I tend to think that once you have a clear vision of what the challenges are, then Africa is not riskier than any other continent. And beside that also, the riskier the investment, the more you get a return. So I do think that we should tell our own story. We should maybe talk about how the Africans have been able to make it on the continent, like the Azalaï group, the Onomo group, the Mangalis, and also the big players. I mean, Accor has been on the continent for 40 years now. Marriott, all these big players have invested on the continent. And if it was that too risky, I don't think we will read about all these very, very offensive growth plan that these big guys have on the continent. So we should, I would say, close the gap between the perception of risk on the continent and the actual risk. Okay. And that will help us also because, and especially my friends, DFIs, I think, are here. They tend to say, well, your project is in a very risky country, so the spread also will be quite high. And that's not really helping the project. So we should really look at this perception of risk.
I think some really good comments made. If you talk about Africa as a risky destination, I'm sorry, that's just not correct. If you look at the world today, it's much smaller than it ever was. Somebody made a quote to me last year, more terrorist attacks in Europe in the last 18 months than in the Middle East. And that's a reference to Africa. I would agree it needs to tell a different story and try and paint itself in a little bit of a different picture as far as the global press is concerned. It has so much to offer. And, you know, if you look at infrastructure, airlift, the huge efforts that have been made on the continent to bring change here in the last 10 to 15 years, where it sits today, the future looks extremely bright. And I would disagree, for the most part, that it's a risky destination to either invest or come to as a tourist.
Okay.
I think, you know, first thing I would say is this industry is for the long term. Anyone who thinks can jump in and jump out, make a quick buck, better think again. It's long term. Second thing I would say is that there is nothing like working with local partners and local investors as the absolute way to de-risk an investment. Local partners understand how things work, they understand how to get things done, and as long as we are both realistic when we get into a partnership about the prospects for the project, as long as the debt levels are acceptable and reasonable, then I think the rest is really, frankly, economies and cycles and, you know, geopolitical shocks. Even in countries that have experienced at an extreme end those shocks, and I go back to Egypt, you can work your way through with your local partners and make sure that, you know, the returns are there. They may not be brilliant when you go down, but they're there, and in the long term, it's actually a great investment and a great partnership. But the key here is you actually got to work together in a win-win scenario. You've got to be proactive when you hit a cycle. When I remember we had the Tahrir Square riots in Cairo and the whole market crashed to 5% or 10%, we literally had our entire leadership team from Dubai fly into Cairo and sit with our owners and actually say, okay, which levers are we going to pull to get through this difficult period and make sure we're paying payroll, we're keeping people employed, and we come out the other end. And not only did that happen, but when you do that, you actually come with a stronger relationship with your investors and your partners. So I agree with you. Frankly, I see Africa today no extremely more risky than some of the other countries around the world. And I do think it's a matter of partnership and understanding that you're in it for the long term.
Look at the performance of Egypt today.
Yeah.
You saw it on the JLL this morning.
Absolutely.
Yeah.
They've had a fantastic start to the year, post the Arab Spring.
And Tunisia also is back on track now. So.
Morocco, everything.
Ignace?
No, I think it's been said. I think it's about perception. I think our world is evolving, as Mark rightly pointed out, very fast in a different area. I think if we look at our groups, we all provide security on the moment of construction. We give advice. We give our operational teams advice on security, how to handle it in the day-to-day operation. And I would say, if you look at even when people arrived here, you know, security is taken seriously. In Europe, we've seen it differently. People are not on this level. So for me to travel to Africa, or when we had the uprising, exactly what Alex was saying, I was doing the same thing with my owners, you know, going there and working our ways through it. If you have, for my home country, the Brussels bombings, it was completely different. So, or the Paris attacks, etc. So perception is one thing, but reality is another. And I think today traveling in Africa might be safer than traveling in other parts of the world.
Okay, thank you.
Just a short point perhaps. Me and Alex touched on this before when I saw him in the lobby today. When it comes to business, commercially, we're all fighting each other, of course, and absolutely in the right fashion, but we are. But not when it comes to safety and security. And I think there's been a good contact between us all when it comes to that topic. People proactively pick up the phone and try and assist.
Going back to Tunisia, Tahrir Square, when you are picking up the pieces following something like that, do you look to domestic tourism more?
I don't know whether you look to domestic tourism more. Domestic tourism is a focus for us all. 65% of the tourism GDP on the continent comes from the domestic sector, from the 10% of total. I don't think you look to that more. I think generally Africa as a continent, and you see that in Egypt over the last 20 years, whenever there's been a serious security issue, Egypt is one of those locations that's been able to bounce back in a positive manner, be it domestically or internationally. So I don't think you just look to domestic.
The one thing that's changing in our world is I go back to September 11 and compare with today. When September 11 happened, it took 18 months for the hospitality industry in New York to kind of almost recover. Today, it's more of a V, and it's a V because today the consumer is very savvy. The consumer is following what is happening on the ground, 24/7, online, on media, understands what measures are being taken, and responds appropriately. And so whenever, heaven forbid, we have a crisis, you tend to find now that, you know, the recovery is shorter than a few years ago when you had more of a U-shape in the recovery. But a lot of it also is to do with the way that the government in question and the way the industry in question responds to a crisis, and being totally transparent, totally open, and absolutely focusing on how you're going to safeguard the safety of both your associates and the visitors. And today everything is transparent because we all have smartphones and we can all watch and understand and make our own judgment. People look at advisories, but they put advisories to one side because they feel they actually know better as to whether to travel somewhere and commit to that trip. So to that extent, things are changing much more down to how you react, how you respond, what role does the government play, what role do we play as an industry?
Okay, I want to go back to the core of this panel, really, and that was to look at whether growth is organic in the future or whether it's going to be acquisitions, new acquisitions. If we could just start with you, Mossadeck, and see what you think about that.
Well, for us, being a regional player, of course, our growth will come from organic. We are still developing with our business model, which is to be owners and managers. We own our properties and we manage them under our own brand, which is the Azalaï brand. Eventually, at some stage, we will start looking into management, if possible. We already did. We are going to start our first management contract in Burkina Faso. Our radars are there. If we have brown fields also, we are looking into a couple of brownfield projects, especially in Ghana and Nigeria. So, but for us, definitely our growth will be organic.
Okay, thank you. Ignace?
Yeah, I think we have, in the market, we see growth organically or by acquisition, but organically you look at greenfield, which takes a bit of time on this continent, we know that all by experience, or you have the conversion, which we all touched upon, which creates opportunity for us. Now, if you look at acquisitions and the opportunities globally, I think Wyndham, for us in our DNA, we look at these things. We've grown. Our company was founded 12 years ago in 2006, and we had our spin-off in the 1st of June as Wyndham Hotels and Resorts. But if you look at our 20 brands, most of them have been acquired. So in the recent 2 years, I think we acquired 4, of which the last one was La Quinta in North America. So opportunities are there, and I think all of us, and as Marriott did over the past years, we look at this, and Accor as well, we look at opportunities that come along to grow, but organic is one, and then acquisition is potentially an option to grow faster.
I would draw a distinction between M&A for growth's sake and M&A that is strategic. And the former is kind of the path we chose. We when I joined Marriott, we had about 12,500 keys in operation in Middle East and Africa. And by acquiring Protea, we doubled in size, but we acquired Protea for a very strategic reason, to get the footprint in Africa, to have critical mass in Africa above property. 250 of our associates are in Cape Town and Johannesburg. And that is why strategically we did it. And interestingly, 4.5 years on, talking about risks in Africa and investing in Africa, we have delivered on or above the business case in each and every one of the 4.5 years in Protea, on the investment in Protea. Then came Starwood. Again, very strategic. For Marriott, it looked at it and said, look, we're going to have the brands to die for in the industry, especially in the lifestyle segment. And the decision was made to acquire Starwood, but it was made for strategic reasons, not just because, oh, we want to add another 1,200 hotels to our system, to broaden the brands and balance the brands and give a very rich portfolio of brands. And that doubled us again from 25,000 keys to 50,000 keys. Today, if your question is, having done this, is this it? I would say to you, I wouldn't rule anything in or rule anything out. We'd look at everything, evaluate it, and yes, there are opportunities today in Middle East and Africa. There are opportunities in chains that have grown very successfully, done amazingly well, but are getting to the size now where all of a sudden the stakes on the roulette table begin to get very significant in terms of investing in development, investing in systems, investing in loyalty programs. And the choice for those shareholders is, do I carry on? Do I take those bets? Or do I partner with a global chain and kind of see my return from that scenario? So we're going to see more. I'm sure we're going to see more.
Okay, thank you.
I'd agree with Alex. I think the big brands are getting much more strategic in their approach to growth. You definitely see that over the last 10 years, not least in Africa. Marriott, a good example with the acquisition of Protea, as Alex says. If you look at Accor and the acquisition of Mövenpick, which within the portfolio, very strategic in Africa with regards to the location of the hotels. Mövenpick, very strong here, some really quality assets, good locations, 23 properties, as I say. Versus other opportunities that Accor has seized, not least moving into a partnership with Mantis, smaller sized, luxury locations, very diverse, but also meeting customer needs. And again, Alex touched on a point before of local knowledge. What does Accor bring to the table with such a partnership? We have footprint, loyalty program, distribution platform. But they are in such niche, strategic locations for Accor, places where our guests would like to go and visit, experience Africa at a different level. And by moving into that partnership, you join forces with that team and their knowledge base in what is an exciting segment of the business, especially in Africa. Okay.
Well, it's been fascinating. Thank you so much. Mossadeck, Ignace, Alex, and Mark, thank you so much. And thank you.
Thank you.